Time on the camera. Okay, this is the last attempt. Okay, let's do a wave check. 1, 2, 1, 2. Let me try one thing actually. Might walk it like this. Is this better? Oh no. Hmm. I think it's the CPU that's the problem. Because we start to lag when we go on.
In one contract. I've had moves come against me pretty sudden.
Load screen, see if good or not. Check 1, 2, 1, 2. Wave, wave. Okay, we might be good. You know what? I'll take it. Finally, eh? Okay, so I'm gonna do a quick recap of the day. Then I'm gonna explain potentially what we'll do next. So last night I went to bed very late. I think I've been awake for maybe almost 24 hours, not quite yet. I went to bed very uncomfortable because the beds were not like this. Oh no. Oh my god. The audio is delayed. What if I go like down here? Oh. One, two, 1, 2. Nah. I'm disconnecting the camera. I tried. So annoying. It's been so long sorting out and only for it to not even work. Great. Oh, new laptop is on the inventory. Okay. Anyway, we tried our best. So, no face cam. That was causing too many issues. So, quick update. I'm gonna go through kind of my day, I guess, which I've been trying to do this for the past 2 hours. I feel like a broken record to myself, but it is what it is. So, I woke up around, I went to bed maybe just around midnight, maybe 1 o'clock, and I just couldn't sleep. So I put a TV show on, hopefully trying to put me to sleep. Every episode was like an hour long, and I got to episode 6. So I think I went to bed around 6 or 7. And I literally see the sunrise slowly. It was pitch black for a while, then it went dark blue. I literally see it go to light blue, and birds start tweeting. Then I fall asleep. My sister leaves at 7. So I literally barely sleep. She wakes me up as she's moving around. Then I go on to take another nap as she leaves. So she left around 8, I think. So from 8 to about 9, I wake up. So it's an hour, maybe 2 hours, you could argue I've slept. From there, I went to, oh yeah, answer the door. That's what actually woke me up. We had mattresses that needed to be taken away, and we were also ordering mattresses in. There's this thing on Amazon where when you buy a mattress, you pay extra money to then actually get them to take your mattress away. So we did that. They took away the mattresses. There was 2, and they gave us 2 new ones. So I answered the door, got that set up. And there's a slight testimony in that too, because literally as soon as they drop off the parcel and they pick up the mattresses, my sister comes back an hour later, like 2 hours later, and she said, "Oh, the people came to drop off the mattresses." Like, yeah, they left quite a while ago. And she's like, "Well, they're still outside then because I just seen them." So I go look out the window, and lo and behold, they're there. I think she spoke to them on the way in as well. So she told me that they broke down, and they had to order somebody to come pick them up. But what's so interesting is that, first of all, they're a lorry, right? So it's not like a car or something, because they're obviously taking mattresses and they're dropping them off. So they're doing big orders. The fact that they broke down after, like they dropped off our parcels, glory be to God, because like they could literally have broken down before us, and then we would have to wait or get rescheduled, which would have worked. So that happened. And then from about maybe 10 o'clock to 5, we did some painting, did the beds, some cleaning up, etc., etc. So we just did some errands, pretty much. And then from 5 o'clock, traveled to church. Around 7, I arrived, and we prayed till about 8. Then I came back, arrived here about 10:30, and 10:30 till about midnight. At 8, watched the show, tried to repaint some things and plan for the final details. And then after that, here I am. Since 12-ish, 11:30, I've been trying to sort the stream out. Unfortunately, the camera just wasn't working. I don't think this laptop can handle it. It's fine. We'll try and invest in a new laptop eventually, but we have this setup, the main setup at home. So I said by force we're streaming today. I don't care how tired I am, I'm knackered, but you gotta do what you gotta do. And I still have more things to do as well. Anyway, so a lot has happened this week. That was just today or last night, or I should say yesterday. And English. I got a busy day tomorrow, Saturday. Pretty much gonna be a repeat of what I saw today. So hopefully we can get more rest. And I did listen to ICT off stream. I just didn't make any notes. So I'm gonna do my best to kind of go over what I heard already and then make notes quickly. I want to finish episode 10 minimum. We've been in this episode the whole week. We should have been episode 20 by now. So we're behind schedule. I'm going to take the video maybe from round 2.
With this continued teaching here, right below here, what's that? That's sell side liquidity. Relative equal lows. So you can test this on your own.
Okay, perfect. So we'll start from here anyway. And yeah, so the plan for the rest of the stream is just to get through this episode 10. Bare minimum. I may, excuse me, depending on how I'm feeling, I did just drink some coffee. I don't think that'll keep me up. I'm gonna be sorry. Coffee never works on me. But after this, how long is episode 11? Yeah, we'll probably do episode 11 tomorrow. But next week, we are going in. We're doing 4-hour sessions because we have to catch up and do more. So yeah, let me just get straight into this. So today, yeah, we're just going to be doing this mentorship until we finish. And I predicted us to finish around the end of this month. So we have, today being the 17th, right? 18th now. So we have 12 days. Okay, cool. Episode 10, let's go.
Chart. I made it by mistake. I apologize, but the low on this candle here is 14,381 even. Okay, don't take my word for it. Go look at your own chart. It's there. So 14,381. I would have preferred to include a line projecting that at the time because you'll see in a moment when we drop down to the little time frame. But the setups are forming here above the opening price, right here near the opening price. See that? And inside of the range from high to the opening price down, it's in that there. So it's giving an opportunity. So again, what's occurred is we went up into that fairly down the chart, down the chart again, and we're anticipating the opening and rallying up into what? Maybe the high end of that fair value gap, or something forming at the news release at 8:30. But if you look at price was starting to pump up higher ahead of the 8:30 news release. So what's that tipping its hand to you, telling you? They're pricing in a premium market ahead of the news. So they're going to use the news to sink it lower because the bearish bias is going to come into fruition. They're going to expand price lower, and they've already established their shorts because they accumulated above the opening price. And we can see that in the price action of each little short-term rally up that we're looking at here. So here's 7 o'clock in the morning, it rallies above these relative equal highs, and cleans up the imbalance here. And look at that right there. See that? Remember I told you there's 2 fair value gaps? Try to trade it in here, but anticipate use of the money management to allow for your stock to weather a run into that. And we got that right there. Now, strip it down to what I taught you for the structure of the trade or the framework. Swing high, broken to the upside, taking out buy stops. So buy stop liquidity is taken. Then with swing low, it's broken. Did these candles come down lethargically? Was it like a slow meander decline? No. It was sudden. It was a lot of momentum. It was energy. You can't miss those down those candles right there. That's obvious. You're seeing that, right? So that's how you know you have a shift in market structure. In this area here, it doesn't have a fair value gap. That's okay, it's only 5 minute chart. This is where we start doing the top down strip of 5 minute, 4 minute, 3 minute, 2 minute, 1 minute. The first fair value gap we come to, if we find one on a 4 minute, you don't need to go down to a 3. You don't need to go down to a 2. You don't need to go down to a 1. If you go down to a 4, you don't see one, you go down to a 3. If you find one there, you don't go any lower. Okay? If you don't find one on the 5, the 4, or the 3, and you go down to the 2 minute, and you find it there, that's it, you don't go down to a 1 minute. If you don't find it on the 2 minute, and you find it on 1 minute, then that's how you trade it. But if we don't have one on the 1 minute chart, you don't have to trade. How's that for logic? So we have the continuation lower off of it retracing in here. Now this candle, the high of it, here I want to use a lighter color. This candle's high is right there. Okay, it actually goes just above that one right there. Not by much, but it does. But we don't need that. We don't need that. Watch what happens. Here's the 4 minute chart. Oh no, something different on this chart. We have buy side liquidity here. The candles are a little bit more beefier when we were looking at the previous slide. Look at this one. Look at the candles. What long candle day. But on this time frame, they become much more prominent, more beefy, much more stout. Like, look at me, I'm here. Take a look at me. That's what we're looking for. We're looking for clean price action, where we can see the nice candlestick formations, where we're seeing the even distribution of the price going higher or lower, in this case going lower, but we're seeing that little break where there's not an even distribution of price. That's the fair value gap. So we have the run above buy liquidity after rebalancing over here. It goes above it and it breaks down. So we have an idea, okay, we could potentially see a trade short here. I like this fair value gap, but we also have a little bit of bouncing here. So I want to trade in here, but my money manager has to permit me to weather a run into this area too. And that's part of the rules. But in here, we're going a little bit deeper. In my YouTube channel, I teach a breaker pattern, okay? And that is a high, a low, and a higher high. That's what this pattern is here, and we're seeing that return here. So if I see a breaker like this, yes, I think the market could potentially trade up into here, but I'm going to use the breaker's candle and just above that for my stop. So I'm not going to go way up here or way up in here, because my foundation to teaching the ICT breaker is the market's going to mostly stay in the lower half of the breaker candle, which is the down close candle right for the big move up higher, but taking out short-term high. Trust me, the breaker's taught in the YouTube channel in other lessons. I'm not going to pour myself over top of lessons and regurgitate things, because there's a lot of you that have been training with me for a long time, and you don't want to go through that. And the new people that are here, I understand your enthusiasm and you want to know everything like a sponge. I get it and I love it. But trust me when I tell you, that is taught in the free lessons in this YouTube channel. Okay, just remember it's a bearish breaker, and that pattern is the support structure. Why I would not expect it to have a higher stop up here. Okay, so here's the fair value gap range from the low and high end. But specifically, this candle's low and this candle's high right there. Extended out in time. But what happens? At 8:28, the candle's showing 8:28 here because it's a 4 minute chart. But once we're trading inside here, all I need to do is trade above this candle's high. I want to be short. I don't want to mess around. It might not give me an opportunity to get in. It might not go higher up into that fair value gap. I want to use the easiest, lowest threshold entry technique to get in to make sure I'm a part of the move. Then I'm going to be aiming for those relative equal lows. That's that 14381 level. 14,381. Remember that relative equal lows? I said I wish I would put a line on it. This is the time frame I added the line. It's the 4 minute chart. Now, if you look real close, you can see there's a little tiny little arrow right there, and a bunch of them over here. What that is Trading View's paper trading module, and with this continued which you can trade in on close, buyers an opportunity to get in there and participate. So an efficient market will see the market go back up and reprice that. So it's down and then right back up, like paint being applied to a roller on a wall. You want to make sure you go back and forth to deposit the paint evenly. So there's an even distribution. So again, the background, that's the benefit of studying old data and then reading price. So
there's something specific I'm looking for. This is it. Just Google Talks to my microphone.
in this area here, we're going to drop down to a lower time frame. But before I do, I want to give you a little bit more details. Think about what I've taught you so far in this teaching for Power 3. The accumulation, manipulation, and distribution cycle of the daily range, if we are trading near the high end of that fair value gap on the daily chart, that's what that level is, okay? When we just drop down to a lower time frame chart. So with this 15-minute time frame chart, and I apologize, the chart's a little bit shifted. It's still the same chart, I just added the annotations. The idea is we're expecting this Power 3 formation where it's open, rally, create the high of the day, sell off, and close near the low. That's what we're looking for. Why would that bias be expected on this day? Because
finally found it. Like cleanly too. Alright. Let me get rid of this. This is a better chart. So, oops. Let me explain what this is. So, if you looked at the previous, let's get this in 9 minutes. The previous talks, right, of the opening of 3. So, the power of 3. First of all, you have your open, then you have price that rallies up a little bit higher, which is accumulation, and then you create or you map the accumulation by mapping the open to the high, and that distance between those 2 points, you account for it below open as well. So above open and below open of market, you take that accumulation or that rally upwards and you take note of the distance and apply it to the downside. So you'll see it's about round about here. That whole move or that whole section will be accounted for as the accumulation. The accumulation is basically where it is a gathering of sell orders. That rally upwards is a Judas swing, which traps retail traders into buying when we're in a downtrend in the market. Things like breakout trades or I don't know, maybe we've broken retest support or resistance or something like this, whatever retail teaches. And institutions see that as liquidity, and as a result, that Judas swing, that fake swing, is to trap more people. And you'll see in that rally, you tend to sometimes either break or, well, to be fair, because it's a daily candle, right? That's another clarification I need to make, because I did mention something in my most recent thing which said we start with time. That's the midnight session for New York, which will be 5 8. That's the beginning of London session essentially. So from the London session, you will see that a lot of the time the London session is that accumulation or is that Judas swing, right? And we don't forget we map it out, that when we have that rally higher, we map it down here. So that whole section there is accumulation, which is where smart money gets into the trades, because as they've trapped buyers, they've now entered their sellers. You need buyers if you're trying to sell, right? You need to actually exchange hands. You need to find people that are willing to buy at this premium so that you can distribute those sales lower down in the market. We kind of covered manipulation there, where we talk about this initial rally up, which is a Judas swing, which is what we call it, and that just quantifies the trap for retail traders, more specifically buyers, trapping buyers when we're looking for sales. Remember, this is something we're looking for in a downtrending market. So you'll realize that this candlestick here is a breakdown of the old school, I guess, price chart. And you can see here that we are, first of all, bearish because we're creating low, high, but we also remember the grand scheme of things. Plus, we have this fair value gap, which price came back to fill on the daily time frame, and then once it filled the high of the fair value gap, we then got that displacement and then deliverance to the downside. So this is just applying the power 3 to a daily bias. Okay. Now we went over the power 3. We went over the 3 things, which should help us now coming back here. So with this power 3, remember we were looking at it on a daily time frame. Now when we zoom into the actual day, what does that power 3 look like? Well, you have the midnight open. So you want to start from midnight. You see this gray line showing midnight open, and this is New York. So this will be like 5 a.m., 6 a.m. for GMT. And by this open, you would see the initial rally up is the accumulation or the manipulation, sorry. So you see this kind of, from midnight, you see price come up again. That is manipulation. Price going up when we are in a bearish market. Or we have a bearish bias, should we say. So you can take it from the open right here to the top, which is this range here. And if you apply that and map it down to this kind of from the open to the downside, that distance will take you around about here. So that plus that whole section here is that range of accumulation. Okay. Manipulation is this bit rally up. Accumulation is shown by from here to here. And then you have the distribution, which is the movement of what distribution down here, which follows the movement to the downside, which is the downside move here. So here, what I'm basically saying in this section is that we see the power of 3 on a small time frame. This is the 15-minute time frame. And on this time frame, we're basically seeing the same thing on the daily time frame, but zoomed in. So what does this mean? Well, let's clarify what we mean by time. It's going to be the midnight, big brackets, midnight open for NY session. Okay. We see that price creates an open and accumulates above opening, or should I say rallies, which is the manipulation. Okay. After we see that manipulation, which is, in other words, a Judas swing, we then have an accumulation that follows suit. Smart money for now. I basically mean hedge funds, banks, retail traders that have understanding / retail traders with a lot of power and capital. Okay, so essentially all we've done is we've applied the understanding that we have of the power 3, which is based on the daily time frame. Then we've now zoomed into the markets to kind of see how that looks like on a smaller time frame. This is important to note because you'll see later on in this video that Michael talks about the time frame or the power of the 15-minute time frame. Another important thing to note is when looking for entries, we scale down if we don't find something on the existing time frame. So a lot of the time, if you, I think I actually have it at the beginning of the video. Hold on, if I can just actually move this down, that'd be nice. So at the top of my screen, it's not in this document. But I have a section where I write down things I will implement. Right, so it's great to go through the ICT Mentorship 2022 session, but it's also important to make notes and activate what you've learned. You activate what you've learned by converting to your own understanding, which is still in line with the original teachings. Then you break it down into small actionable steps, which you keep you on track to consistently being applying the model. And then once you have that consistency, you'll then start to hopefully see the results. So back to the point I had. So we have the power 3 in the daily time frame. We see the 3 steps of manipulation, accumulation, distribution. We're focusing right now on the manipulation, accumulation part because that's at the start. Then we zoom into the markets and we see the daily power 3 play out and what it looks like on those 15-minute time frames. Now let's continue the video because he starts to talk about some important things which I maybe have forgotten and I want to include.
As we worked the upper end of that fair value gap on the daily chart, then we had multiple shifts in market structure bearishly when we already have a bearish bias on the daily chart anyway. So it gives you a high probability that this day is going to be a down close day. It may not close on the low. It might just be a big down move. And that's all you need. You just need movement. So this level here is dash. That's the midnight New York opening price. This is what I'm referring to when I'm looking at the opening for Power 3 on a daily chart. That price right there at midnight. Look what's occurring. That right there is equivalent to this little tick on this diagram here. It opens, it trades above the opening, just like that candle does on a daily chart. It opens and goes higher.
That is not working. It's totally too slow.
In one contract, I've had moves come against me pretty sudden, and there was nothing I could have done about it. And that's all you need. You just need movement. So this level here is dash. That's the midnight New York opening price. This is what I'm referring to when I'm looking at the opening for Power 3 on the daily chart. That price right there at midnight. Look what's occurring. That right there is equivalent to this little tick on this diagram here. It opens, it trades above the opening, just like that candle does on the daily chart. It opens and goes higher. You want to be selling short here. Why would you want to go short here? Well, they went back up in there and re-delivered the down stroke on that paintbrush or rolled on the wall. Well, now it's going back up. When it's going up like that, it feels unnatural to go short. Like you don't want to sell short. It's like, this thing's going up. Why do I want to go here and go short? That's the benefit of studying old data and then reading price, studying it real time, without taking any demo trades, without trying to pick the targets and forget all that. You want to practice for months. Reading the tape, studying price action, watching, even if you have to.
Okay, well, give me a second. So, basically, making up what you just said, where he's talking about how we only need price to move in our direction. What that essentially means is that we're not always trying to find out where price is going at the end of the day. We don't need to know what's the exact value price is going to hit. A lot of times I spend too much time focusing on, especially on the larger time frames, where is price going. Now that's important, but the exact value isn't important. We just want to catch the moves, because moves is what creates profit. So when we say here that we only price to move into our direction, we're talking about our bias, right? Generally speaking, we want to be trading with our bias. So when we say price move in our direction, we're talking about the bias, or at least where our take profit is. That's the bare minimum. So we increase the probability of that happening when we have multiple confluences in our favor. The only difference between confluence to a retail trader and confluence to a smart money trader is what are the confluences. A retail trader thinks simple. And I think one of the dangers in life is that just because you understand something, people are trapped by their understanding. When you want things to be easy to you, or you want things to be simple to you rather, people stay at that level because it's a comfortable place to be. But you'll realize, at least I did, that once you see a pattern in losing, or pattern in not being great, or pattern in not being who you want to be, it means that you don't have what it requires to become what you need to be. And if you don't have what it requires to become what you need to be, you need to get what it is. And it's most likely going to be in wisdom and understanding. Even the Bible says, get wisdom, get understanding. Okay, so what that means is that we need to elevate ourselves. And when smart money is trading, they tend to think differently, or at least understand how retail traders think and trade against that. So we only need price to move in our direction. We increase the probability of price moving in our direction when we have market shifts. Now, I'm naming one of the confluences. I said many, because again, every episode is tailored to a thing. So one of the market confluences in this example is we have the fulfillment of the fair value gap on the daily time frame, meaning that the imbalances have been filled, meaning that price no longer needs to kind of move in the upwards direction. And once you fill the top part of the fair value gap, the low of the first candle, or is this a bearish fair value gap, we can then safely say that we filled it. And once we filled it, we can then start looking for sales. And when we're looking for sales from the midnight open, we can see, since this would have been kind of Asia session, we're creating these lower lows from the midnight open, which is around almost like 2 hours before London open. We then see price rally up. So in that London session, which is around about here, we then see price rally up a little bit into this fair value gap, which is expected. As a shift down, we have this fair value gap form, and price comes back into this fair value gap as well. What happens? It drops. And what is this all part of? The manipulation, the accumulation of sell orders. You can start to see where the accumulating begins, okay? And then we increase this probability by these market shifts. And a characteristic of a market shift which is what I'm writing here, is that we need, remember, to have a market shift. We need to see a strong push to a strong break of a. We need to see price move strongly, basically. We'll try and make it as simple as possible. Let's continue.
Watch it with TradingView's market replay function. There's nothing inherently wrong with it. If that's all you have, you can't watch it live. But it is altogether something different and much more beneficial if you can watch the actual live data. So as I mentioned in my own paid mentorship, I always counsel my students that if they have the means to do so, invest in, like, I have Camtasia. Camtasia is what I use to make these videos. It's through TechSmith, and TechSmith, you can Google them. It's pretty a sell before one. Well, here's that fair value gap. It rounds up into that. Isn't that a sell above the opening price? Yep. Sure is. From that opening price to that high, that's the highest high. Take that range and subtract it from the opening price. That's about in this vicinity here. Okay, right in there. So what's occurring? Well, we have this sell here. Then we have this sell here at the equities opening, and then we have this imbalance in here. So from this range high to that low, multiply that by 2 as a projection. In other words, whatever that low is to that high, that much lower you'll expect to see a short, and it forms right here. That's exactly what I taught you. I did not cherry pick that, folks. You can go back and look at data as long as you can find data on daily charts, okay? And if you can get a intraday chart, like an hourly chart, you'll see it. It's there. But this is 15-minute time frame. That's my bellwether chart. That's what I teach all my students. This is the one you go to for day trade and or scalps. You can find everything for intraday trading on a 15-minute time frame. If I was held to a decision of what time frame would you be forced to trade with if you had to pick just one ICT, the 15-minute time frame. Because I can do anything with that 15-minute time frame. I can swing trade, I can short-term trade, I can day trade, I can scalp. But you only need to have one discipline, one way of doing it. And you might not like the 15-minute time frame. You might like the 1 minute chart if you're trading indices. But you have to have a storyline of the 15-minute time frame to get the full panoramic view of what prices are likely to do. So with this continued teaching here, right below here, what's that? That's sell side liquidity, relative equal lows. So you can test this on your own chart. I made it by mistake. I apologize, but the low on this candle here is 14,381 even. Okay, don't take my word for it. Go look at your own chart. It's there. So 14,381. I would have preferred to include a line projecting that time because you'll see it when we drop down the lower time frame. But the setups are forming here above the opening price, right here near the opening price. See that? And inside of the range from the high to the opening projected down, it's in that vicinity there. So it's giving you another opportunity. So again, what's occurred is we went up into that fair value gap on the daily chart. We're on the daily chart again. And we're anticipating the opening and rallying up into what? Maybe the high end of the fair value gap or something forming at the news release at 8:30. But if you look at price was starting to pump up higher ahead of the 8:30 news release. So what's that tipping its hand to you? Tell me. They're pricing in a premium market ahead of the news. So they're going to use the news to sink it lower because the bearish bias is going to come into fruition. They're going to expand price lower, and they've already established their shorts because they accumulated above the opening price. And we can see that in the price action of each little short-term rally up that we're looking at here. So here's 7 o'clock in the morning. It rallies above these relative equal highs and cleans up the imbalance here. And look at that right there. See that? Remember I told you there's 2 fair value gaps? Try to trade it in here, but I anticipate using the money management to allow your stop to weather a run into that. And we got it right there. Now, strip it down to what I taught you for the structure of the trade or the framework. Swing high, broken to the upside, taking out buy stops. So buy stop liquidity is taken. Then with swing low, it's broken. Did these candles come down lethargically? Was it like a slow meander decline? No. It was sudden. It was a lot of momentum. It was energetic. You can't miss those down close candles right there. That's obvious. They stand out, right? So that's how you know you have a shift in market structure. In this area here, it doesn't have a fair value gap. That's okay. This is only 5 minute chart. This is where we start doing a top down strip of 5 minute, 4 minute, 3 minute, 2 minute, 1 minute. The first fair value gap we come to, if we find one on a 4 minute, you don't need to go down to a 3. You don't need to go down to a 2. You don't need to go down to a 1. If you go down to a 4, you don't see 1, you go down to a 3. If you find one there, you don't go any lower. Okay? You don't find one on the 5.
Why is this no fair value from that to that?
5, the 4, or the 3, you go down to the 2 minute, and you find it there, that's it, you don't go down to 1 minute. If you don't find it on 2 minute, and you find it on 1 minute, then that's how you trade it. But if you don't have one on 1 minute chart, you don't have to trade. How's that for logic? So we have the continuation lower off of a retracement in here. Now this candle, the high of it, here I'll show you the lighter color of it. This candle's high is right there, okay? It actually goes just above that one right there. Not by much, but it does. But we don't need that. We don't need that. Watch what happens. Here's the 4 minute chart. Oh no, something different on this chart. We have buy side liquidity here. The candles are a little bit more beefier when we were looking at the previous slide. Look at this one. Look at the candles look wonky on me. But on this time frame, they become much more prominent, more beefy, much more stout. Like, look at me, I'm here. Take a look at me. That's what we're looking for. We're looking for clean price action, where we can see the nice candlestick formations, where we're seeing the even distribution of the price going higher or lower, in this case going lower, but we're seeing that little break where there's not an even distribution of price. That's the fair value gap. So we have the run above buy side liquidity after rebalancing over here. It goes above it and it breaks down. So we have an idea, okay, we could potentially see a trade short here. I like this fair value gap, but we also have a little bit of bounce in here. So I want to trade in here, but my money management has to permit me to weather a run into this area too. And that's one of the rules. But in here, we're going a little bit deeper. In my YouTube channel, I teach a breaker pattern, okay? And that is a high, a low, and a higher high. That's what this pattern is here, and we're seeing that return here. So if I see a breaker like this, yes, I think the market could potentially trade up in here, but I'm going to use the breaker's candle and just above that for my stop. So I'm not going to go way up here or way up in here, because my foundation to teaching the ICD breaker is the market's going to mostly stay in the lower half of the breaker candle, which is the down close candle right for the big move up higher, taking out short-term high. Trust me, the breaker is taught in the YouTube channel in other lessons. I'm not going to pour myself over top of lessons and regurgitate things, because there's a lot of you that have been training with me for a long time, and you don't want to go through that. And the new people are here. I understand your enthusiasm and you want to know everything. That's fun. I get it. I love it. But trust me when I tell you, that is taught in the free lessons in this YouTube channel. Okay? Just remember, it's a bearish breaker, and that pattern is the support structure. Why I would not expect it to have a higher stop up here. Okay? So here's the fair value gap range from the low and high end. But specifically, this candle's low and this candle's high right there. Extended out in time. Look what happens. At 8:28, the candle's showing 8:28 here because it's a 4-minute chart. But once we're trading inside here, all I need to do is trade above this candle's high. I want to be short. I don't want to mess around. It might not give me an opportunity to get in. It might not go higher up in that fair value gap. I want to use the easiest, lowest threshold entry technique to get in to make sure I'm a part of the move. Then I'm going to be aiming for those relative equal lows. That's that 14381 low. 14,381. Remember that relative equal lows? I said I wish I would put a line on it. This is the time when I added the line. It's the 4-minute chart. Now, if you look real close, you can see there's a little tiny little arrow right there. And a bunch of them over here. What that is TradingView's paper trading module. And I put some short on this today to illustrate what many of you have been asking me in TradingView comment section. A lot of you send comments through TradingView. And I apologize, I don't get to them a lot because there's a lot of them usually that happen. And I just don't get to them. I'm sorry. I'm not purposely trying to ignore you. It's like Telegram. People send me messages there too. I don't have time to go through it. Emails, absolutely. I don't have a lot of time to get through this. Everyone wants to write a long story to me, and I appreciate them. I can't sit there all day long and read all that. But the idea of showing what a discount broker margin, what could I do with that? Okay, I don't recommend it. But there are brokers out there that will allow you to trade the mini contract for just a couple $1,000 and the micro for less than $100. And to me, that is absolutely stupid. You're asking to blow the account. In these markets, you absolutely can have your 100 parts handed to you in short, sudden fashion. Even me, in the last, 4 weeks or so, I've seen moves that came back on my stop so fast. I was like, wow. Just the other day, I watched a 100-point run come out of nowhere. In a 1-minute candle, it moved 100 points in the NASDAQ. 1 minute. That's a lot of movement in. So if you're looking at that and you're trying to hold, let's say, 16 minis or 8 minis, and it moves $2,000 against you in 1 minute, folks, your stop would not have been respected. It was literally way above your stop loss if you were using one, okay? So you would have got stopped out with negative slippage. And let's say you were holding those 8 contracts. Well, let's say you got burned for 50 points in slippage. And you don't think that's possible? Oh, it's there. 50 points, just like this. That's $1,000 times your 8 contracts. You just lost $8,000. And you're going to tell me that you can open up an account with $10,000, whatever, and you'll trade multiple minis because the discount broker allows you to. And all of a sudden, you just roasted your account in one trade in some wild little price move that came out of nowhere that you didn't expect. And in one candle, 1 minute candle, it just smoked your account, just like that. There are teachers out there that are promoting the idea that that's a good idea. That's not a good idea, folks. $10,000, that's the absolute minimum. I don't think it should be that. I think it should be a little higher than that. I think $15,000 is fair for what the NASDAQ is doing right now because just today alone, moved $8,000 per one single contract. Over $8,000 in movement for one contract. Now that's top to bottom, and likely being that move is probably obviously not likely, but the measure of risk needs to be appreciated and respected. And unfortunately, YouTube makes it available for anybody to come out here and pretend to know what you're doing. And unfortunately, if that person isn't skilled, if they don't really do what you say they do, or teach proper risk, or to teach you to respect the level of risk that's required to trade these markets, they're doing a disservice. And that's the number one reason why I taught for a long time with a demo, and still teach with a demo. Because number one, legal reasons, I'm not trying to be held liable because I'm not licensed to trade advice, but it's not trade advice in the whole account. You're not making or losing anything. It's fantasy football with price charts. But you can learn how to read price action with it. This year, I've been showing you a live account. That's real. I'm not teaching through that. Notice that? Okay? At the end of the year, I'm going to share with you what that account has done. I'll be 100% transparent. I will show you line by line every single trade from every single trading day of every single trading week of every month. You'll see it. Okay? Throughout the year, I'm going to be teaching lessons about certain things, and you're going to see them applied when I share the entire history with that account. So it's more meaningful. There's a lot of you in the comment sections that are trolling. And I know what you're here for. But I'm going to give you undeniable proof, just like the rest of you. That way you can see the lessons I'm giving you, yes, they worked in demo, but they're actually being utilized in live fund trading by me. It's after the fact, so I cannot be accused of giving you trade advice. It's what I did with my real money. See the difference there? It is what it is. If you don't like this teaching style, there's other people out there teaching all kinds of great stuff. Doesn't mean it's profitable, but they got all kinds of neat stuff to look at. I'm teaching you how to reprice. And I need you to be sober-minded about the level of risk that these markets provide us because it can take you out quickly. So, I got questioned by, 6 or 7 of the people. Some of them are actually my students in mentorship, and others are just people that are on the internet. I don't know if they're just YouTube or they're just trading you, people that try to follow me on there. But they asked, could I showcase what I would do with a $10,000 hypothetical account if I was using a discount broker. In other words, a broker that would let me trade with, I don't know, like $2,000 or $1,500 per contract, something to that effect, for a NASDAQ mini contract. Number one, it was crazy trying to find some of those setups because to frame the risk in it and to do big lot sizes too was very challenging. But I kept it low end. It only took me 2 weeks to do this, but you can see I put a heavy-handed short up here using what I'm teaching here, and then aiming for those relative equal lows, which is at 14,381 level. Oh, you Photoshop this. No, I did not. I don't need to Photoshop this. In fact, my live mentorship with real students that paid me, they're going to see me show this live, and it's going to move all around. It's not edited. I'm going to log out of the account and log back in, so it's not me doing any kind of editing. It's not MT4 servers or anything like that. You can play around with. It's not Ninja Trader. We can go in there, you take a bad trade out and it look good. All these things here are executions. Okay? And you can see there's 3 losing trades there on the 14th. And of course, you can see today's trades all at the top. That was me doing a heavy-handed, quant style heavy-handed short, and then taking partials as it was going down into that level of 14,381. Look at this. This is your classic, the guy shows you the results. Okay, shows you, this is what I did with my demo account. Any line, say it's a real account. This is clearly a paper trading account. You can see it, it's there, it says right up here, paper trading. Okay, paper trading. This is all paper money. Okay, I started the account with TradingView at $10.
This is 14 days, so that's 2 weeks. And he's 6x the account. 7x the account. Bro.
Okay, and that was on February 3rd. Just 2 weeks ago, today. Okay, so 2 Thursdays ago, I started this and set the account to start with $10,000. And I started trading it, and you can see the positions here with just the NASDAQ. Okay, I'm not doing anything with like Forex to make it go up. I'm not trying to pull out bonds. I'm not trying to do anything like that. I'm showing you just the NASDAQ. Starting with $10,000 in 2 weeks, using, again, the limitations of, I don't want to say limitations, the pseudo benefit of a discount broker. What could I do in 2 weeks doing that? And using what I'm teaching you too. That's the difference. I'm literally teaching what I'm showing here. I just showed you the example of it in the chart before. This is the equivalent of 582% in 2 weeks. Now, it's hypothetically done in paper trading, yes, but with the perspective of a hypothetical discount broker margin being used. So, whereas I'm trading with TD Ameritrade right now, and they require me to have almost $22,000 trade one contract. I don't have a problem with that because of the level of volatility that's in there. It just makes it easy for me not to worry about it. Like, I'm not worried about it. I know I got plenty of margin. I know I got plenty of equity. If I get banged by something kind of nowhere, say Russia goes into Ukraine or China invades Taiwan or something crazy comes out and crosses the market to go nuts, because I expect that to be coming anytime now, it won't smoke my account. Okay, I'm not gonna blow the account. I guarantee you this account's not blowing. Okay, and I'm showing, in my opinion, what it would be like for someone if they ever got to the point where they put years into developing their own model. Now, that doesn't mean you can't find profitability before that, but after you've done it for a while and you found your own niche, what you want to do with the content I'm teaching you, you'll find your own groove. And once that's done, and you can formulate a well-written model on paper where everything is outlined. When do you buy? When do you sell? Where do you put your stop at? When do you move your stop? How many contracts do you trade? What constitutes a day where you don't take a trade? All those types of things. I will teach you those lessons in this YouTube mentorship. Okay. A lot of you also are very excited, and you're like, okay, I see you doing this, but I'm not really learning anything new. I'm disappointed. I'm not done. You give me those complaints after I am done. Okay. But I'm giving you gold. Like, this is something that you can go out there and turn in these markets and really develop a skill set that could completely change your whole entire direction in your life. I'm not promising profitability. Notice that? See that? I'm not promising that. I'm not promising a 6-figure income every year. I'm not doing that either. I'm telling you that you will love price action because it repeats. It's something that's, well, it repeats. And if you know something to repeat, it's familiar. And things that are familiar are comfortable. Right now, you don't know what these patterns are likely to do. They're unfamiliar to you. So it's important for you to understand that's a temporary struggling point. But going through the things I'm going to teach you to do here, and I'm streamlining. Yes, this doesn't feel like streamlining to some of you. You want me to come here and say, this is where you buy, this is where you sell, you just put your stop loss right here, and you just reach your profits. It's always like this every single time. Watch, rinse, repeat, and it never violates any of those rules. And it's just always the same way. If you think that way, just change this channel right now, let me come back here, because that's not reality. There's going to be similarities that look slightly different than the last few times you took the trade, but you will recognize them. But my question to you is, if you could do this over a year, not 2 weeks, would you be impressed with yourself if you could do that? Would you feel that would be enough? Some of you young guys don't think this is enough. And it's amazing. And that type of return is amazing. If you turn that with a live account, that's phenomenal. Like, that's wealth making there. You don't need to get out to make money. But if you can get that kind of number a year, over 12 months, hit something like that, that's amazing. And that's not even what I teach my students to expect. And this is not bragging. I'm not trying to say, look at me, I can trade a demo account, look at me. That's not what I'm doing here, folks. Okay? I was asked sincerely to show. You all hear me telling you, and I'm showing you it's a paper trading account. Because I'm not going to go into AMP or some other broker that's going to allow me to trade with discount broker margins. I'm not going to do it. I know, even what I know, I'm going to get smoked if I try to do something crazy and heavy-handed. Because even with me trading one contract, I've had moves come against me pretty sudden, and there was nothing I could have done about it because the volatility is so fierce right now. I'm not afraid of it, but I do absolutely respect it. So to provide a answer to the guys out there that say, yeah, it's stupid to trade in another account where they use the exchange rate margins for initial margins, which is we're now almost $22,000 for NASDAQ. One mini contract, you got $22,000. It was at $17,160 about 3.5 weeks ago, 4 weeks ago, but they raised it up. If they raise the margins, this is 3 notes, okay? If they raise the margins, that's the exchange tipping their hand to you that huge moves are coming. Big, monstrous moves are coming. And they just raised the margins. You think that's coincidence? It's not. Big moves are coming. And if you're offside, it's going to be real hot in them pants. But if you're on side, oh man, you're not sweeter than that. That's like winning the lottery. And these moves are significant. I mean, let's go back up for a second, okay? And I'll close this video. If you look at the fair value gap in here, okay, and say you're filled at 14,515, and you're aiming for 14,381, is that 6.5 points? No. Is it 20? No. Is it 50? Mm-mm. Is it 100? Nope. It's more. Do you see a pattern here? One contract? Folks, what I'm teaching you,
It's not gonna work. It's fine. Only got 10 minutes left. Come on.
is literally a ATM machine in your hands. I'm giving you the pin numbers. Every time I do a video here, I'm giving you another digit. And once you figure out what digit you want to do with this content and make it part of you, and you'll see what I mean by that. Right now, you might see me showing you. It's like, man, this makes perfect sense. Most of the comments that I don't allow to be posted are just sugar sweet, diabetic coma type lovey-dovey comments. And I'm not making fun of that. And I appreciate it. I know what you mean by it. And you want to show your adoration and respect. And I love that. But don't lose sight that you're feeling that splash over because I'm literally taking you into the chart and showing you what I know. And you're excited because you know the opportunity is available to you if you stick to this. And that's the right perspective. Some people post in the comment section and they try to do something with live accounts. I already said, no, don't do that. And they're saying, I don't think these concepts work because I tried to do this and I tried to find this fair value gap today. And you know who you are. I'm not trying to be funny. I'm not talking down to you. But the bias is bearish. So if the bias is bearish, would you go in looking for a bullish fair value gap? No. That's the purpose of having a model. And then with that model, each morning, before the markets even start trading, you write down what your intentions are. What does that mean? I gave you the range, right? Here's the opening price. It rallies up to that. So inside that range, you're going to look for a setup. Go short. You're bearish. And if it goes down below that low, you can still take short if it's in this range minus this low. Okay? If it it leaves that area, you can't chase it. I don't care how good it looks later in the day. You don't do it. You have to have discipline, folks. If you don't have discipline, your broker's not going to help you with that. They want you to click that button so they make money. And they don't care if you blow your account because there's going to be 20 more to replace you. Because they've watched ICT videos. They've watched everybody else on YouTube that try to tell you that you can do this. And it's so easy. Even a pizza delivery boy can do it. So, hopefully, this has helped clear up the idea of bias and Power 3. And I will be repeating these themes when it's applicable in the newer videos that come out and examples I'm going to teach with. But for now, I can't say it enough. What you were just exposed to, that is the underpinnings of what we do in my camp, okay, ICT. My students, we look at price like that. Let me throw one more thing in here, just to piss off everybody that doesn't like these long videos. Let me go back up into this area real quick. And on the daily chart with the candlesticks, that's what I'm looking for here. There we go. All right, notice something. From this low up to this high, it's bullish, okay? We're expecting bullish prices. This is how you backtest. You tell yourself in your annotations, I was expecting. You're basically lying to yourself in the comments of your chart when you're backtesting. It sounds foolish, okay? Trolls are going to love that comment coming out of my mouth. But what you're doing is you're teaching yourself pseudo experience. It's training your subconscious to see this stuff like you saw it live. And when you record it on a chart in your own annotations and you log it and you keep it in your journal, and on the weekends you go back and look at your Monday, Tuesday, Wednesday, Thursday, Friday, and then you look at the previous week. And you start looking at these patterns and how it repeats over and over again. When it's bullish, you're trying to stay with the opposite of this. Open near the low, close near the high, but expansion to the upside. So accumulate longs, manipulate, get people thinking it's going to go lower, and then ram it up higher. Distribute the longs near the close. That's what you're looking for here. With that mindset, okay, you're all afraid of, but what happens if it's a down day? ICT, what happens? Well, the worst thing that can happen is you lose money. And if you think that you're going to trade and not ever lose money, turn the videos off. Don't ever watch anybody else's either, because that's not a proper mindset. Traders are professional losers. They're managing every trade right from the beginning. They got to come out of the costs. You're paying a commission, and if you got slipped in Forex, you got a spread. Every trade opens up as a loser. So a trader is a professional management company of losing trades. They turn losers into winners. But not every loser can be turned into a winner. But they don't lose their business because a few never become winners. It's real important to understand that, folks. It's a paradigm shift that took place when I was a younger man. I felt that there was a way for me to always win. I was convinced of it. There isn't. There is no way of doing that, okay? So, last analogy, last lesson, and the video is over. If we're bullish here, okay, we're expecting each candle to expand higher. So in other words, the close be higher than the opening on each individual candle. My up candles are green. How many black or down close candles do you see in this price run? 2. Wow. How about this price move here? It's going lower, right? Going down for the sell side here. You're bearish. But what happens, ICT, if it goes up? You'll probably lose money. But let's count how many up close candles we have. 1, 2, 3, 4, 5. Look how much range it moved. If you can't have a model that weathers, say you got a losing trade each one of those days, if that blows your account, you're not managing your risk properly. You're over leveraging or over trading. See how easy that is to deduce your problems? It's simple stuff, folks, but you're scaring yourself. You're overthinking things. You're listening to me talk about multiple concepts that will come together in a few weeks, but you're overthinking everything. And you're trying to assume just because you watched a few videos, and you're thinking foolishly that just by watching a few of these videos, we're only in episode 10. 10 episodes. And some of you think you can go out there and own the world now. I understand it's empowering information if you've never been introduced to it, but you're not going to own the world up to episode 10. You're not going to do that. You're going to lose money if you go out there and try to rush to try to do this stuff. There's a lot of things we still have to cover. And you haven't even back-tested it enough. I haven't even been teaching it long enough on YouTube for you to even have a backlog of data to draw experience from. So think about that, okay? Trust me when I tell you, folks, these moves repeat all the time. All the time. And don't feel like you're missing out because you're not doing it right now. Put that feeling aside. Make this fun while you're learning it, and it'll never feel like a job or a tedious task. And that's going to be it for this one. Hopefully it was insightful to you, and until I'll talk to you next Tuesday, enjoy your weekend and be safe. All right, folks, welcome back. A little bit earlier broadcast today. I have some plans this evening, so I want to get it out of the way. All right, so we're looking at, obviously, a hindsight view of something I pointed to before it happened. So that way you guys got a chance to see what it was like for my private mentorship group. When I say these things, it's almost like an invitation for some of you to email me to ask to join that. You can't join it. Okay, I'm teaching mentorship.
Okay, we're gonna end it there. Just for the sake of it's almost 3 a.m. Okay, I have early guys as well. Finally finished episode 10. Episode 11 will continue tomorrow. Then we'll continue from there. Appreciate everyone for tuning in. I know it was very hectic today. But you gotta do what you gotta do. And we streamed for an hour today, so I'm happy. And we'll move on till tomorrow. It's been with CJIC.